Hi everyone, this is Jason Burak of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a first-time guest. I found his presentation very interesting earlier this month at the DC Blockchain Summit. He's working at a very interesting blockchain technology startup. They're working on some really incredible stuff over there. He's a product director at Exchange Union. Kilian Rausch, thank you for joining me.
Thanks for having me, Jason. Great to be here.
Now, Kilian, before we talk about some of the technologies like Lightning Network and atomic swaps that you guys are integrating into your startup to solve a major market problem with trading of cryptocurrencies and blockchain technology, let's just get your opinion then on the state of the blockchain technology industry after this huge crash in cryptocurrency prices. So I think, over 70% of the market cap since mid-December has been wiped out. Have you noticed if this is making it harder for either startups to raise capital to start innovating with blockchain technology further, or are these large companies that have been promising innovations with blockchain technology, are they less likely now to innovate with the drop in the cryptocurrency prices?
I don't think so. I think especially the larger companies now notice the potential of blockchain technology and how it will disrupt various industries. So I rather think that the recent market crash that we saw earlier this year makes investments and capital be invested more focused. So I think it's in the end it's a good thing that this market cleanup, that's how I like to call it, actually happened, because it will make investors focused on projects that give value to the cryptocurrency ecosystem. So no, I don't think it will harm the real innovation. It won't harm the real projects that are contributing in making cryptocurrency and the whole ecosystem valuable. It will just sort out the projects doing maybe questionable developments. That's my opinion on that.
Yeah, that's a good point. I think it'll weed out a lot of these crypto pumpers and some of these initial coin offering fraudsters. I mean, the SEC is cracking down on these initial coin offerings, but there was a lot of fraud and manipulation and pervasive pumping of some of these altcoins that I've never even heard of for over a year.
Agree. There are really funny names out there, right? So sometimes I just do it for fun. I try to register a coin and I see this name is already taken, and it's really funny what kind of projects are out there.
So let's transition now to the technologies that Exchange Union is working with. So you guys are working with the Lightning Network. For our listeners who are not familiar with the Lightning Network, what is it?
All right, let's maybe start with a little recap how the Lightning Network, like a little bit history, how did it come up? So the Lightning Network was mainly a paper released by Joseph Poon and Ted Dreiger back in 2015. And since then, people got the feeling nothing much happened, right? So a lot of people was like, yeah, I heard about the Lightning Network, but what was going on with Lightning in the recent years? But then in 2017, with the whole scalability discussion coming up, the SegWit activation dilemma, even SegWit 2x, and very expensive fees on, for example, the Bitcoin blockchain, Lightning was a topic again. And people started talking about Lightning because the main promise of the Lightning Network was not only instant transactions, but also very, very low to negligibly low fees. So Lightning was a topic again, and then for us as a project, the milestone and where we started actively thinking and working with Lightning was actually something that is not really, the public, I have the feeling, is not really aware of it. It was a swap between BTC and LTC on the Lightning Network. So this was performed by Lightning Labs, that's how the company is called, from San Francisco. And they successfully, for the first time in history, did a cross-chain swap between Bitcoin on the Lightning Network. That means it was instant. And this was something that was a major milestone for us and basically the decision maker for our current technology architecture. So we knew that the Lightning Network was capable of doing swaps and doing exchanges, so we could use it in our platform. And then I think, like, really for the mainstream, the everyday John Doe, where people started noticing the Lightning Network was when Blockstream opened a sticker store back in January and accepted Lightning payments to buy stickers and later on T-shirts and hoodies. This was really a major milestone for Lightning as well, because we saw massive adoption. We saw like 200 nodes and more added per week. and we're currently looking at more than 1,000 nodes live on the Bitcoin mainnet. And this was mainly driven by the Blockstream sticker store, which is a funny thing, but that's how it works. That's how Bitcoin and crypto people tick. And I have the feeling since then the movement is really taking off. People start researching the Lightning Network. People start spreading the word. On Twitter, you can see a lot of handles now have the Lightning symbol in it, including mine. So you can see people are really spreading the word and the awareness. And 2 weeks ago, I think it was 2 weeks ago, we have the first somewhat stable version of a Lightning software from Lightning Labs, the LND 0.4, where they say, okay, officially this version now is stable and safe enough to use on the Bitcoin mainnet and to send and receive real Bitcoin in real time. And so, yeah, we are very early days for the Lightning Network, but the adoption is already, it's huge. I mean, 1,000 nodes, this is, I think, more than Bitcoin Cash, for example, has as real nodes out there. So I'm really happy to see that this adoption is that fast.
And there's been no major failures so far in the 2 weeks or so that the Lightning Network has gone live. There's not been any major bugs that have crashed it or people have lost their Bitcoins yet. None of those things has happened yet?
I think there were some people that lost. Again, people are testing it on the mainnet with like not that much Bitcoin in their channels, and they shouldn't, right? So people that are testing it at the moment, they're aware of the risks that they are taking. So I'm not aware of any major incident because people basically just don't put that much money in their channel, so they can't lose that much. I think there were some people, I saw some reports that lost a little bit because something was wrong in the software, but this was back in January, I think. Recently, I'm not aware of any major losses.
So there's some Bitcoin purists out there that think, this Lightning Network, which is a second layer, just how the internet has multiple layers of protocol software on top of it with email and other things. There's some Bitcoin purists out there that say that the Lightning Network is not naturally Bitcoin. But I noticed in your presentation at the DC Blockchain Summit, you guys said that Satoshi Nakamoto actually theorized something similar to the Lightning Network in his Bitcoin white paper, how there would be no need to put every single tiny little transaction on the Bitcoin blockchain. So talk about that a little bit.
Yeah, definitely. So we saw an old email from Satoshi Nakamoto himself, which is still available on the Linux archive, so everybody can look at it. He already had the basic idea behind Lightning, saying that basically a transaction state which can be updated more or less infinitely and enables real-time trading. So Satoshi himself already had the idea, okay, at some point, the Bitcoin blockchain will hit a limit with regards to the transactions that it can process. So to enable use cases like trading, I might have to take a transaction off the blockchain and I just keep updating it with new states, with new balances. And only when I'm done, I will basically broadcast it back to the blockchain again. This is exactly how Lightning works, the underlying principle. And people, in my opinion, start only now understanding that off-chain doesn't equal bad. So off-chain is the basic requirement for instant transactions. There is no such thing as instant transactions on the blockchain. It's as simple as that. When it comes to a blockchain, I always have block times. So times I can never have an instant transaction. And I know other people have different opinions with saying, okay, we don't need necessarily a confirmation about that. In my opinion, or in our opinion, the only way how you can get secure instant transaction is with a second layer like the Lightning Network. So maybe I can talk a little bit more about the second layer and also what I was talking about at DC Blockchain Summit. So the Lightning Network itself, you got to imagine it really like a second layer on top of the Bitcoin blockchain, on top of the Litecoin blockchain, also on top of the Ethereum blockchain, by the way. It's called the Raiden network on Ethereum. And how it works is you take coins from the underlying blockchain. Let's, for example, take Litecoin. You take Litecoin and you put it into the Lightning channel, deposit. So it's like a funding transaction into the channel. So in the channel, they are not usable by on the underlying blockchain anymore. So they're literally taken out of the Litecoin blockchain and put into the channel. Once they're in the channel, I can send them between two parties instantly by basically, again, the principle is updating the state of transactions, updating the state continuously without broadcasting it to the blockchain. That's how it is enabled. Here comes the thing about network and also the rating network is it's still secured by the underlying blockchain. So transactions in the Lightning Network are as secure as the underlying blockchain. Why is that? That's simply because at any given, either of the two parties could decide, hey, I want to end this relationship, I want to close our channel, or I think even something is wrong. I say, hey, the balance that you just did, the balance update that you just did is new. Then it would just go and broadcast the latest state to the blockchain. And through cryptography, it's ensured that both get back their corresponding correct, valid amount of Litecoin. So simply, it is secured by the underlying blockchain because at any given point of time, both could just broadcast the latest state. And this ensures both parties that they actually don't have to do it, right? So especially for how we use it in Exchange Union, our channels are meant to be kept open more or less infinitely. To close a channel, apart from you really want to end the connection to this specific person. But channels itself, there is no time restriction. They can be kept open infinitely.
And one of Bitcoin's major criticisms, especially lately when things were really booming a few months ago, was that the amount of time, like you said, it took to verify a transaction and the cost. So you're saying that Litecoin would basically, if things are successful with Litecoin in the future, it would solve all of these problems?
So if Lightning goes right, and it really looks like it at the moment, we are seeing negligibly low fees. That's simply because let me quickly, briefly explain what's the difference between the public blockchain and the Lightning Network itself with regards to fees. So why are there fees on a public block Litecoin? That's because everyone on the block has to look at a single transaction, make sure it's valid, and then reach a consensus. So the main issue why I have to pay significant, high fees in general on the blockchain is look at it. That's a lot of work to. Whereas a Lightning payment channel only exists between two parties. So only two parties are involved in a transaction and have to look at the state. The rest of the network doesn't care, so to speak. So the fees I have to pay, if I have a payment channel with you, for example, we don't have fees at all. That would work. Only if between us and other people have to process the transaction with us, then that's where fees come into play. So that's the Lightning fee structure is totally different from a blockchain fee structure because only two people are involved in a transaction versus everyone looks at every transaction. So yes, I believe it will significantly improve the fee situation for cryptocurrencies.
Now let's talk about atomic swaps because that's the other major new technological breakthrough that Exchange Union is working on integrating. So before we talk about how you guys are going to integrate atomic swaps, my listeners who aren't familiar with them should probably get an explanation of what they are.
Sure. Atomic swaps. First, in general, what do? It's enable a so-called trustless exchange of two different assets, or also called we swap two assets. Because an exchange of two assets always consists of, think about it, it always consists of two transactions. I sent you A, you sent me B. That's how an exchange of two assets works. And the question now is, if we talk about a decentralized network and a peer-to-peer transaction, for example, between you and me, then the question is who sends first? Because if I send first, if I'm the one sending my, for example, Litecoin to you first, who ensures me that you just don't disappear after receiving the Litecoin or just become unresponsive or don't send back the agreed amount of, for example, Ethereum, right? Nobody can ensure that at the moment. So it's not trustless. It's quite the opposite. There's a healthy amount of trust involved in such a peer-to-peer. In 2017, basically, we needed a somewhat trusted custodian in the middle, something like an escrow service as a middleman for our assets to, our money to. And then this trusted person in the middle would swap the coins and send it respectively back to us. So now here's where the atomic comes into play. So atomic means that ensured through cryptography that both sides of the trade have to happen or none of it will happen. That means if I send you A, also you have to send me B. Otherwise, my first transaction is not valid. And that's what atomic swaps do. They ensure that both transactions happen or none of them happens. And again, through cryptography.
Is that a smart contract feature that's been integrated into that, or is that different?
You could call it a smart contract, actually. So it's called, technically, the technology is called HTLC, hash time lock contract. In my opinion, it's a smart contract, even though on Bitcoin it's not called smart contracts. Because it's somewhat limited, not Turing complete. But yes, it's a smart contract that ensures exactly this. So HTLCs on Ethereum are implemented in like a regular smart contract, whereas on Bitcoin and Litecoin, they use opcodes. So a different set of opcodes combined together also form an HTLC.
Okay, so it's similar but different. So that's very interesting. So it has smart contract-like properties with atomic swaps for our listeners who are trying to get their heads around this, because the name sounds kind of difficult to understand, but I think you did a good job explaining it. So then, for example, then you said earlier in the interview that the first successful atomic swap was done moving Litecoin and Bitcoin from one to another.
Yeah, so first it was actually done on-chain by Charlie Lee. So Charlie Lee, I think it was back in, August or September last year. I don't really recall exactly at the time, but Charlie Lee did an atomic swap between Bitcoin and Litecoin on the blockchain. Right, so this was a regular on-chain transaction. So atomic swaps can live on both. Atomic swaps can either happen via regular on-chain transactions on Bitcoin and Litecoin, or what we saw in November, what Lightning Labs did, and what is even more interesting is they can be done on the Lightning Network. So atomic swaps on the Lightning Network were successfully tested between two different chains for the first time in history back in November 2017. And that's where, in our opinion, it gets really interesting because it's instant. So the difference between the atomic swap that Charlie Lee did and the difference between the atomic swap that the Lightning Labs did is that its Lightning Labs transaction was instant. So the swap was instant and was incredibly cheap. So this was a proof of concept for us that our basic underlying architecture works.
And is atomic swaps, is it still in beta testing, or has it gone live like Lightning Network?
I would say it's still in the very early days. Nevertheless, it's already live out there in production in the form of decentralized exchanges, actually. So atomic swaps not only exist between blockchains, atomic swaps also exist on the Ethereum blockchain already, and they are already live. For example, on Ether Delta or in the 0x protocol, they use a very similar structure. Let's just say they are atomic swaps because that's what they are, to swap ERC20 tokens. So at the moment, I already can do a trustless exchange of two ERC20 tokens on the Ethereum blockchain, for example, on Ether Delta, or for example, on 0x. Whereas, so this is out there, it's tested, and it's a proven technology. It works pretty well. What is not that well tested and what is still in its infancy and very, very early days is cross-chain atomic swaps. So atomic swaps between, for example, Ethereum and Bitcoin, and also atomic swaps between Bitcoin and Litecoin. This is very early days still, and but I'm confident we will be seeing more of these come out. For example, we have the Decreed project, which has a very mature library already for atomic swaps between a lot of different chains. And also, for example, altcoin.io, a new decentralized exchange, is actively working on BTC and ETH cross-chain atomic swaps. So yes, we see a lot of players working on it, including us.
Do you work out routinely and eat healthy almost all the time? If you eat paleo or vegan or work out routinely, you may be eligible to save up to 33% off on your life insurance thanks to Health IQ. Health IQ is a venture capital-backed, big data technology life insurance company that offers customers life insurance at special rates by using the latest technologies. For more information, please go to healthiq.com/WS4MS. That's healthiq.com/WS4MS. You guys, I was really impressed with your presentation. You're going to combine these two new exciting technologies, and you guys are planning to go live in sometime in 2019. Explain what the goal is with Exchange Union to combine with these two technologies then.
Right. So what we do at Exchange Union, we plan to connect digital asset exchanges. So the difference between us and, for example, Ether Delta and 0x that I mentioned before is that they are targeting individual traders, individual users. Whereas we believe that the technology itself is still somewhat complicated to handle and not really ready for individual usage just yet. And also, decentralized exchanges are suffering a major problem, which is liquidity. There's simply not enough liquidity going on just yet. So that's why we decided, okay, why not go for exchanges first? Connect exchanges together first as a first step and leverage the liquidity that is currently living on exchanges and all the user base. The vast majority of traders is on centralized exchanges. I mean, let's be real. And connect exchanges together first in a decentralized way. So we connect exchanges directly peer-to-peer to each other so that users of exchanges can directly trade with each other. And what it means for users is that they have access to different prices on different exchanges, that they have access to new trading pairs, which maybe only exist on one particular exchange, without leaving the exchange. So you don't need multiple accounts on different exchanges anymore simply to have access to the trading pairs you like. You can stick with your exchange, and once it's connected to Exchange Union, you automatically can directly trade on all other exchanges which are connected to Exchange Union.
Now, Kilian, if you guys can solve this problem, you guys are going to be worth a lot of money. I have a lot. I have a lot of listeners to my podcast who trade cryptocurrencies, who own cryptocurrencies, speculate in them, or invest in them. And one of the most common problems I hear from them, and this includes myself, is the frustration with having to open up multiple accounts at the different exchanges if you want to buy different crypto. So the company or startup that can solve that problem and make it easier, more convenient for someone to go out there and open up a Coinbase account like me and go and buy cryptocurrencies on either an Asian exchange or a European cryptocurrency exchange or online trading platform, that would make their lives a lot easier.
Definitely, and that's also how the inception of the idea happened. We are traders ourselves, and we know the pain points, right? So, especially the KYC part in opening an account, you sometimes need to wait weeks until you get your account KYC. So, yeah, definitely, that's how the idea started. What I want to add here is, as priority users, nevertheless, exchanges are our users. So we don't only think about the traders, which naturally provides a lot of benefits, but also about the exchanges. So in Exchange Union, we really took great care to design, for example, the fee system in a way that exchanges get something out of it, right? So basically, the main idea is for exchanges which provide liquidity to the network, they get rewarded. For exchanges that take liquidity, that use the liquidity, which are basically the taker part of a trade, they pay for it. So we are a little bit innovative on the front here, where we incentivize exchanges to provide liquidity to the network, because that's the determining factor for Exchange Union to be successful, is to have great liquidity available.
Just walk our listeners through a sample trade then, using maybe Coinbase or another larger exchange, and then how your guys would simplify things and solve problems then for trading other cryptocurrencies.
Sure. So let's take Alice, for example. So Alice above is usually the tech example. So we have Alice, and she's a user of Coinbase, right? So she has an account on Coinbase. Everything's KYC'd, and as we all know, the trading pairs on Coinbase are somewhat limited. So I think it's only Bitcoin, Litecoin, and Ethereum, right? So I only can trade these three currencies on Coinbase at the moment. So let's say Alice now wants to buy Ethereum Classic, something that is not available on Coinbase. So what she would do now, and if Coinbase allows her to do so, she would go to her Coinbase account, logs in, and would just simply input into the buy field, like buy Ethereum Classic with my, for example, Litecoin. And then this order would get picked up by Coinbase, and Coinbase actually runs a node, our software, which is connecting Coinbase to all the other exchanges. So this node picks up Alice's order and checks where on all the other exchanges can I find the best price for getting the Ethereum Classic for Alice. And then, for example, let's say it's on, where is Ethereum Classic available? Maybe on Kraken. So the best price I could find is on Kraken. So then the node takes care that the order gets matched with another order on Kraken. And after the order is successfully matched, the crucial thing actually happens is the swap of the coins. So that's where the Lightning Network and the atomic swaps come into play. So for each and every trade that happens on Exchange Union, we actually swap coins in the background. So then Litecoin gets sent from Coinbase to Kraken, and Ethereum Classic gets sent from Kraken to Coinbase. And Alice can see it in her account instantly. So instantly in terms of network latency instant. So after a couple of milliseconds, this swap will be successful and she can immediately see it in her portfolio at Coinbase. So you notice the crucial thing is not only matching orders, the crucial thing is to do an actual swap in the background for each and every trade that happens. Because that's the only way how we can remain fully trustless, so that Coinbase and Kraken don't have to trust each other.
And you guys are using a lot of complicated technology in the background, but if I'm the customer and I'm the cryptocurrency trader, you know, I don't really care about the complicated technology in the background as long as it works and it makes my life easier to do the trading, right? So ultimately, that's what most of the people are going to care about.
Right, perfectly right. So you as a user, you might not even know that this is happening. So as a user on Coinbase, you just see, hey, Ethereum Classic is available. That's pretty cool. Let me buy some. And you will just enter the order and Coinbase does all the heavy lifting for you. All this is happening in the background, but you as a user, you don't necessarily even know that this is happening.
So the outlook for you guys are obviously, I don't know exactly how many people, I think I saw like 6 of you guys in hoodies. So you guys are doing you're in China, you're also in Silicon Valley, you're the stereotypical startup. You're planning on getting this launched by mid 2019?
That's right. So the plan for us now and what we are focusing on in 2018 this year is really just build the software. So that's a main objective of ours, and we are currently looking for developers. So yes, we are still a pretty small team. We only have like a handful of full-time developers, simply because we are looking for very like a special skill set, let's call it like this. So we are actively hiring developers here in Shanghai and also in Silicon Valley, and even we are also working with a couple of developers completely remote. So we have, for example, one of our developers is located in Israel, right? So that's all options for us. As long as the skill set fits, we are really open. We're really open to work with people all over the world.
Has the Chinese government tried to, I know we talked about this with the Great Firewall before this, but is the Chinese government really anti-cryptocurrency or blockchain technology innovation companies, or have you found that they really don't care too much?
That's actually quite interesting. So being in China now, me personally, for a couple of years already, China is somehow, it's hard to really figure out what's the train of thought for the government. But what we see in China is there is still a lot of innovation and a lot of companies actually working on blockchain technology. So China is basically following through on support blockchain innovation, support companies which do a blockchain technology, but just don't use cryptocurrency, and especially not together with Chinese renminbi, the local currency here. That's something. I mean, we all know that the recent clampdown on the exchanges here in China. So it's just basically cryptocurrency, no. Blockchain, yes. With regards to us, though, it's a little bit different, and that's also a major driver why we do things how we do it. We decided to open source everything we do. So this includes, for example, not only educational stuff, like, for example, the presentation in DC, we put it on the internet. This also includes our code. So our code is available open source and for free, and you can see currently where we are on our GitHub, right? With this, we are kind of not really a service provider or someone operating something. We are providing a software. And this is very important for us with regards to liability. So there is no company operating exchange union. It's every exchange itself operating exchange union, and it's a truly peer-to-peer, 100% decentralized network. So there is not us in the middle operating something, which also is very beneficial for us because we are not liable in terms of we cannot be held liable, and we don't want to being in the middle and operating, for example, something like a server. So yeah, in the end, we are a software company developing an open source software, and that's pretty okay with the government.
Yeah, things seem pretty complicated in China because, I know I've heard the stories that they've been kicking out a lot of the Bitcoin miners lately and basically forcing them to Canada, although, there's also the economic incentive for them to want to move to Iceland or Sweden or Canada because they can get cheaper power and there's the natural, cooler climates that save them money on cooling down the mining rigs.
That's true. That's happening. We can see that a lot of the major miners are moving the operations somewhere else. That's definitely happening. But on the other hand, the government is very supportive with regards to companies like which are doing blockchain technology and which are doing stuff that is not directly related to cryptocurrency. I have to say personally, let's see how this thing plays out, because for me, still cryptocurrency and blockchain always goes together somehow. It's really, really hard to differentiate the two. But the direction of the government is clear, be it on the forefront for blockchain and just a little bit more critical approach with regards to cryptocurrencies. Let's see how that plays out.
Yeah, thanks for sharing your boots on the ground insights there on how China is dealing with that. Because, a lot of the different governments are handling things quite differently, because there's a lot of, original Bitcoin people like the cypherpunks and the anarcho-capitalists and the libertarians who bought in Bitcoin, and they were worried that the U.S. government was going to stop it. But the U.S. government doesn't want to stop it. The U.S. government, with all the regulatory agencies like the SEC and the CFTC, they seem more interested in taxing and regulating and making sure, there's no fraud with initial coin offerings rather than killing any of the cryptocurrencies or any of the innovation.
Exactly. I definitely agree with you. You would be killing innovation. So if you just are suddenly going out there and are being very hard on cryptocurrencies, you would essentially kill all innovation and people would move and companies would move somewhere else. That's what you don't want as a government. And that's why governments are taking this careful approach. Let's, for example, take Japan as another example. It's a country we are very close to as well, and we know what's going on. So Japan did do like completely the opposite. Did put official regulation and official licensing in place from the very beginning, which was also not 100% successful as well, right? So in Japan, the regulation was in place, but for example, the enforcement was lacking. So after the coin check hack back in a couple of months ago, last year, after the coin check hack happened, now the government is really taking care that the regulation is actually enforced, that, for example, exchanges really practice good security practices and secure customer funds properly. But Japan is on the forefront with regards to licensing, and also now is really following through on it. So different governments, different approaches. But in my opinion, as long as we have one country that is pro-blockchain and that is pro-cryptocurrencies, there's no way to stop it.
And from a government standpoint, it doesn't make a lot of sense for the government to want to kill this new technology industry with innovation, because there's a lot of tax revenues that could potentially, a whole new industry that could potentially be over $1 trillion. Look at the total market cap for cryptocurrencies. We almost got to $1 trillion a couple months ago. In a couple years, we might easily get over $1 trillion. And that's a lot of tax revenue that if government banned it or outlawed it and started throwing people in prison for anyone who bought or traded cryptocurrencies, that would be a lot of tax revenues off the table then.
Definitely. Again, Japan, for example, I think it's more than 50%. I think it's 52% on tax that you pay on gains that you make in cryptocurrency. That's something that is already reflected in the GDP of Japan. So it's a significant amount of income, of revenue for the government, for the country as a whole. So in my opinion, governments should be very interested in in attracting cryptocurrency and blockchain companies.
Yeah, and so the Asian, a lot of people aren't aware of the numbers. I saw this in your guys' presentation. The majority of exchanges and cryptocurrency trading volume is in Europe and Asia. So a lot of people think that it's mostly in the US. That's just not true.
That's correct. So the main two markets are still Korea and Japan. So definitely Asia, and also it depends on what you define as an exchange. So it's just exchanges that meet certain criteria. The vast majority is actually in Europe, which was something that surprised us as well when we did our market research. But Asia, with regards to trading volume, it's just huge.
Yeah, I think that's from the fact that they have huge STEM background, science, technology, engineering, math. and that they're used to buying things on their phone. And then also, if you play a lot of computer games or video games, in a lot of those games, you can buy things inside the video game. So, cryptocurrencies in that respect, it's a lot easier to want to adapt to cryptocurrencies when you've already bought things with your phone or on a video game.
Yeah, exactly. Not only this, also, for example, I think it comes down to a somewhat gambling culture, which is definitely definitely present in Japan and Korea, for example. So I had the chance to talk to a major social media influencer from Japan, and he just said like, yeah, when you look at Japan, people think of a very conservative culture with regards to financial investments, and he was like, it's not. We are gamblers, and that's why cryptocurrencies are huge in Japan. And I think, yeah, that's something people are not really aware of, especially in the West, how big gambling actually is in Asia. If you've been to Macau once, then you're like, yeah, well, Las Vegas is interesting, but that's where the stuff is going on. So yeah, gambling is huge in Asia, and that's definitely driving cryptocurrency trading.
Very interesting stuff. So before I let you go, you guys have a $10 million market cap with your token. Anything else you wanted to talk about or mention about Exchange Union and the plans you guys have before I let you go?
Our proof of concept is very important to us, our implementation. At the moment, our focus again is on developing the software. So we are on the road. We have been on the road, and we will be on the road in the next months and organize technical events. We organize meetups on our own where we educate people on the technologies in detail, how we use them. And we are very interested in working with technical people and developers and especially. So what we try to do is actually rethink open source development a little bit. And we learn from Bitcoin here, where we say, okay, open source development is cool, but until now somehow it didn't really work out that well until basically Bitcoin came up, in our opinion. Because Bitcoin somehow made open source development cool again, and especially also open source development now somewhat pays back, because when I'm a Bitcoin developer and I contributed to the code base in the early days and I naturally was holding a couple of Bitcoins, I get rewarded by that, by now the value increase of the whole ecosystem. And this inspired us where we say, okay, open source development somehow has to be rewarded. So we are actually using our token to reward anyone that contributes to our code base, that contributes to our technical documentation. So that's something I really want to push within the next month, and that the whole team is pushing, and the actions that we do to motivate people, excite people about the technology and contribute to our project, and they will get rewarded with our token.
Very cool. I think you guys have a great idea. I was very impressed with your presentation. I want to wish you guys the best of luck. And if things work out, I think you guys are going to be very, very rich.
Thank you. Let's see.
So if our listeners want to either sign up, check out your blog for updates on this, or sign up for your email address to get updates on this and the advancements that you guys are making, how do they do so?
So just go to exchangeunion.com and click on, I think, news, and then you will see our blog, and you can sign up for a newsletter. And make sure you follow us on Twitter. It's also linked on our website, exchange_union. All major announcements, all achievements that we had, we will write a blog post and we'll push it on our Twitter channel.
And are you guys actively raising capital with token raises, or are your tokens available for purchase on which exchanges are your or online platforms are your tokens available then?
You can purchase our token. At the moment, the main exchanges are OKX and HitBTC, and also naturally we are on all decentralized exchanges. So you can just go to either Delta or IDX.com and get XRC, our token. We are not really actively looking for fundraising at the moment. We are well funded, so we are good from the financial side. So that's not a goal that we're having at the moment. The goal is really build the technology.
This is very exciting, Kilian, to watch you guys this unfold and, see this whole experiment for the last 8 years or so with Bitcoin and cryptocurrencies, and then, more problems are getting solved and there's more innovation. This is really exciting what you guys are onto.
Yeah, I think so as well. So it's something that keeps you up at night, and that gets you into the office early in the morning. And that's the people also that we're searching for, and that we want to get the same excitement out there.
So I think my listeners are going to be very interested to keep tabs on a progress report for the progress that you guys are making, the advancements that you guys are making. So let's plan then on maybe 6 months or so having you back on to talk about progress reports. And I think I really wish you guys the best of luck. I think you guys have a real shot here to make a nice difference in the world, because I've just heard from pretty much anyone involved in crypto the frustrations. It's like I don't ask people about it, but it's like one of the first couple things that comes out with, I wish to God I did not have to sign up on all these different cryptocurrency exchanges.
Yeah, it hold my funds everywhere across different exchanges, and yeah, it's a risk factor in the end, and it's a huge pain point.
Yeah, it's the largest headache, I would say, in the entire industry right now. Well, besides the fact that the price has crashed, but I mean, considering how many times we've had Bitcoin crash in price, I mean, that's pretty normal. But the fact that people are just frustrated with having to sign up for all the different exchanges, and there's not a simple, convenient solution, I think people will pay a premium for that. So I wish you guys the best of luck, like I said.
Thank you, Jason.
Okay, great. Well, thank you for your time.
Thanks for having me.
Please like this video, share it with friends and family, and don't forget to subscribe to the Wall Street from Main Street YouTube channel if you have not already done so. We're closing in on the 20,000 YouTube channel subscriber milestone, despite YouTube censorship, and hopefully we'll be able to get to 30,000 or even 40,000 YouTube channel subscribers quickly if YouTube doesn't shut down the channel. If YouTube does shut down this channel, remember to also sign up for the Wall Street from Main Street email list that's on the wallstreetfrommainstreet.com website, and will tell you where the videos are going to be uploaded instead of YouTube. Also, if you really like the content and you decide that you want to give a one-time donation, you can go to the wallstreetfrommainstreet.com website, where there's different options for you to do so. Or you can become a Patreon contributor. Thanks for listening, and I look forward to providing you guys with some of the best information, analysis, and financial education available out there for free or paid.